about the need for accounting. So it is about division of labor, specialization, development. On banking and insurance, lot many areas are there, and to each and every sector, there is a need for accounting. Irrespective of any sector, the accounting is must. Who all require this information? Basically, everyone requires this information. Those are the stakeholders, like the investors, employees, lenders, suppliers, customers, government. Everyone require accounting information about the business. These are many are the limitations of accounting, which accounting consists all the past data, do not consider the future and realistic information. It is all the way dependent upon how the accountant is going to interpret some transactions and accordingly going to work. Then these transactions are going only when considered monetary transactions are there. The qualitative transactions are never considered in this kind of accounting. The non-monetary qualitative ones are not at all considered. Next is the objectives and functions of accounting. So it is about recording the transaction, classify them, then summarize them each other with all the balances considered, interpret and draw a meaningful conclusion and communicate the same. These are all the requirements, objectives, and functions of accounting. These many are the branches of accounting, like the HR accounting, in which human resource, whenever there are certain payouts from the company to the employees, whether the employees are really working hard towards the organization, how much are returns from the employees, these all things will be considered into HR accounting. Financial accounting would talk about financial accounting talks about the regulatory part of it, like the journal entry, then the ledger posting, trial balance, profit and loss account, balance sheet, cash flow statement, and fund flow statement. These many are the things required into financial accounting. I will repeat. The first is the journal entry. Second is the ledger posting. Third is the trial balance. Fourth is P&L account. Fifth is the balance sheet. Sixth is the cash flow statement. Seventh is the fund flow statement. Like these, all documentation are required and to be reported to government, to income tax authorities, to bankers, to anyone who require. The next is the cost accounting, which wants to cut down on the cost of goods sold so that selling margin, if price remain the same, profitability can increase. So cost accounting is another branch, another huge, important branch of accounting. Management accounting is highly utilized by the managers, by the board of directors, upper management, for taking certain useful decisions. So these decisions are about budgets, strategies for the next year, or maybe certain expansion plans, taking certain corporate actions, etc. Tax accounting is about the considering calculating tax liability and informing the same to the government. Next is the social responsibility accounting, which talks about how the companies are required to do certain social upliftment activities. So that is maybe through education, healthcare, sanitation, these kind of services. This was the last slide yesterday we considered scope of accounting, in which accounting is mainly concerned for the measuring past performance. Then it is to forecast next actions, future action, take certain useful decisions, increase the value of stockholders, those who are the shareholders, give more and more returns to them so that they can invest more and more to the company. Performance evaluation need to be done so that targets can be set and next year's target can also be decided. Then providing all the necessary information to the regulatory authority is another requirement. I hope those all things were very pretty clear to you by now, because we had just a revision of what we discussed in our previous session. Now it's a time to go ahead with today's discussion. Accounting concepts. So accounting is the language of a business. Accounting is concerned with how the financial transactions are recorded. Business firms are going to communicate their affairs and financial position to the outsiders through accounting in the form of financial statements. Now, businesses are going to communicate all affairs and financial position to the outsiders. Outsiders means to whom? To all the stakeholders. There are certain internal stakeholders and there are certain external stakeholders. The competitors, government, bankers, then the customers or suppliers are all the external, we can say, stakeholders. Employees, then the management, board of directors are all considered to be the internal stakeholders. To everyone, this accounting is very much required. Certain principles are to be followed strictly while maintaining the accounting, and that is also on a uniform basis. What exactly is uniform basis? Every year the accounting is required, irrespective of whether you are doing business or not, whether your business is doing well or not, you are supposed to maintain accounting. There are generally accepted accounting principles. We call it as GAAP, GAAP, GAAP. That's generally accepted accounting principles which are followed uniformly, universally. Like, this is important for the multinational companies. Suppose multinational companies are working in India and there are branches of it in outside India. Like there is one company, say Infosys Limited. Now Infosys has got branches or offices across the world in different nations. So their presence is more than one country. Now, if Infosys Limited wants to know the profitability from some other country like say USA or Australia or say UK, it should get this knowledge and should get comparable with other countries and other maybe India, we can say, when they are going to follow the similar accounting policies. I understand there is going to be a difference into the currencies. So the dollars and the pounds or GBP or maybe Australian dollars, those currency will be different. But at least they should be having a common ground for comparison if accounting all these uniformities are maintained. So the gap is basically to consider gap. It is generally accepted accounting principles are required for getting the uniformity to the accounting. Now, the classification of accounting concepts. Few of the concepts are considered at the time of recording the transactions. When a person is supposed to record, he is going to maintain certain accounting concepts, while some other are considering accounting concepts while reporting to the upper management, that is through management accounting. So some of the concepts are at the when the transactions are happening, At the time of recording the transactions, few of the accounting concepts are followed. Rest of them are followed when there are reporting made to be made. The next we consider is recording stage, where we have to consider the few of these all or these all we can say the business entity concept. A business will be different to that of its owners. Say example here, I have my own business, so my income will be considered as my individual income. My business income will be considered as my business income. I'm not going to club them together. However, this concept becomes irrelevant. This concept becomes little difficult when there is sole proprietorship concern. Suppose, see my, but when it comes to partnership firm, when it comes to company, then or LLP, these things are little different. Like with the in companies, the directors and owners are different. Say for example, now if I have got a business where I am holding one company, I am holding certain shares into the company, so I become the owner of the company. But I am not working towards daily operations of the company. Thus, I am not a director there. So I might have appointed two of my friends who are expert in handling the business. They are the directors. So I am the owner of the business. They are working as the director of the business. So here the ownership and its control, ownership, control, and its actions are all the way separated. Now, separate entity from owners, that means my ownership in the company would only be limited up to certain content, up to certain shares, up to certain amount. But my PAN card and my company's PAN card will be different. So transactions happening between company and me will be considered as a business transaction, and the company will be having independent, separate legal existence. So it will be forming all the accounting concepts. It is going to upload its own income tax returns. It will be having its own income as an artificial entity. Even though I am the owner, I am just owner of few of the percentage of capital. Say for example, I am holding shares of Reliance Industries Limited. So do I become the owner? Yes, I am the owner of Reliance Industries Limited. Up to what percentage? Point something something, because I'm holding not that much chunk of shares. So I'm holding few of the shares of Reliance Industries Limited. So up to whatever the percentage of holding I would be there, I become the owner of it. Mukesh Ambani is the promoter, maybe an owner of Reliance Industries Limited. He is also holding few of the shares. But Mukesh Ambani will be filing his own income tax return. Reliance Industries Limited will be filing its own income tax return. And I am being the shareholder of Reliance Industries. I am also filing my independent income tax return. Those three are not nowhere interconnected. So that's something business entity concept. Company has got a separate, distinct legal existence. Next is money measurement concept. Earlier, few centuries ago, there was the barter system. So barter exchange, that means exchanging goods for goods, and there was no concept of money at all. So money was not even involved, and thus people used to exchange goods for goods. Say I have rice in excess, I want milk. So I used to exchange rice and get the milk. This is a simple phenomenon of how barter system works. But eventually, people thought that this is going to be very inconvenient. Now, what if I want rice, but not milk, but I would like to have something else? Now, these mutual transactions are not happening because the other party is not agreeing with the terms. And in that case, it becomes difficult to exchange those commodities. What if I do not have anything in surplus to sell? I won't be able to purchase anything in return. And that's why this money measurement concept introduced, which had the uniform principle, which had the similar weightage, and thus money introduced. With that, this industrial revolution happened. More and more use of money started, and the money measurement concept came into picture for the accounting. It's commonly going to be unit which we are going to consider. So there are specific units which we are supposed to consider. There are certain common terms which we are going to use. Now, salary is something which I can say is a word, but someone can use it as honorarium, someone can use it as the remuneration, someone can use the word as the no certain returns. Now, if everyone would start having different terminologies, it would become difficult to remember and to understand the accounting. So the accounting has given few of the concepts, few of the words which should be utilized in accounting when they are all the way linked to money. Say, for example, books purchased, that means we are going to spend money. We sold goods, that means we are going to receive money. If we pay salary, that means we are going to make expenditures, we are going to pay money. When we are going to get interest, that means we are going to receive money. Every transactions were connected directly or indirectly with money. So that money measurement concept was considered very, very important in accounting. Next is objective evidence concept. Now, every accounting would require to have the evidence of it. What evidence? It's a proof that the transaction has happened. Now, how am I supposed to consider that the transaction has happened is by taking the cognizance of the certain proofs that yes, if I am receiving any inquiry for this sale of goods, so upon that inquiry, I'm going to proceed with the production. When the production is over, I'm going to go with certain labeling, packaging, etc. Then I'm going to send quotation. Then the quotation is getting approved. Then I'm going to sell the product with certain invoice. For that invoice, I'll be receiving certain payment by check. So the pro forma invoice, the quotation, then the purchase order quotation, then the invoice, and the maybe transport bill, transport challan, and the finally payment made by check. These 5 documents become my proof that the transaction so has happened. That's why this evidence concept is introduced. To every transaction. You need to have certain evidence with yourself. Evidence concept. The next we have is historical record concept. What's this historical record? We are going to record all the transactions which have happened in the past. As I mentioned, those transactions which are done in the past, we are going to record those. Because these transactions which have got certain meaning in the past will be recorded, which transactions are going to be there in future, but we don't know when this will be happening, do not have any place in the accounting system. So historical records will be there. Next is cost concept. So cost concept is all the fixed assets are recorded in the books of accounts at the price at which they are acquired. So when the asset is acquired at rupees 1 lakh, it is recorded in the books of accounts as 1 lakh, even though the market value may be different later. but the asset is shown in the books at the cost price. I'll explain this what the concept is. You are going, you are going to start a business, and for that business, you need to have land. So on that land, you are going to construct a building and you are going to start with your activities, business activities. So for purchasing land, you inquire what the land piece is, how much is the measurement of it, and then you decide that, okay, let's go with the purchases in purchasing the land. The agreement is sanctioned for 50 lakh rupees. The market value of the land is 56 lakh rupees. So the market value ongoing is 56 lakh rupees. But after negotiations with the parties, you and the other party, the seller of the land, have agreed for 50 lakh rupees. Which one would you consider in the books of accounts? Is whichever is the lower amount that you are going to consider. That means 50 lakhs you will be entering into books of accounts. Now, this is something we consider very unrealistic that existed as example. Very unrealistic because the actual price of land is 56 lakhs. It was just you decided to pay it at 50 lakhs. You are recording it at 50 lakhs. But the land is worth rupees 56 lakhs in the market. You are not considering the above the 6 lakh rupees price, because you and the other party have decided to pay the cost for it is 50 lakhs. So this is very difficult to assess the true financial position of particular transaction. So the cost concept is considered over here. Next is dual aspect concept. Dual aspect is for the every transactions, we are supposed to pass two effects for the same. The one is the receiving aspect, the other is the giving aspect. Let's take example, a simple example, okay? You go to a shop, go to any grocery store and you purchase certain groceries. So what are the two effects for this transaction? You are going to receive groceries and you are going to give money to the shopkeeper. Two things are happening. So to every transactions, we are going to narrate this with that dual aspect, dual effects, to get it verified. That yes, this has been happened, that goods have been received and you have given certain cash to the shopkeeper. Anytime your assets and liabilities accordingly getting matched. So because of this matching concept, your total should get tallied. Due to dual aspect concept, these two effects, one is given to the debit side, another to the credit side. This double entry system is all the way followed, and this you will come to know in our next session, next lecture on chapter number 2 about double entry system. So these things are very important. Please note down the last two these lines, which are particularly in a bold format. In just little higher one, liabilities in bracket equities is equal to assets, and capital plus outside liabilities is equal to assets. These are all the stages which we are concerned at the reporting stage. Points are elaborated in our next 7 slides. So you'll get everything in detail. If you have missed any 1 or 2 points, no, do not worry. We have the full information in the upcoming slides. The first concept is going concern concept. Going concern, that means a business is supposed to go on without any hassles, and there should always be certain consistency in the business. That means if there is no certainty, if there is no sustainability to the business, then the business is going to be into problems. Like if the business is not having any sustainability, it is not going to have any consistency in its working, the bank would not lend money to the company. The investors won't be ready to invest into the company. because they know that the business is not going to carry out anything in future. So they are not interested. The suppliers won't be getting any assurance about the credibility. Similarly, the customers won't be there interested because the company is not going to work consistently. So the overall purpose of the business do not get resolved if we do not have this going concern concept. And that's going concern. That means irrespective of whether your business is earning good amount of profits or the negative profit, it is loss, a regular normal or business, average business, or very high business, or very low business, you are supposed to maintain the accounting for each and every year. Say example, during COVID pandemic, lot many industries were shut down completely. Few of the sectors even were not progressing enough even after COVID pandemic, like the travel and tourism, hospitality industry. These were not functioning very well even when the corona was completely over, because people were having that threat in the mind that if they start traveling, they again will be countering this kind of COVID thing, and which becomes difficult for them for the not because it was a life threatening problem, and thus people were reluctant to even go for traveling purposes. But because of this kind of problem, for almost 2 3 years, the travel and tourism industry, the hotels and hospitality industry was into very bad shock and was into very bad we can say losses. But in spite of they had to continue the business, they had to do the accounting very well. Even though there was no income for them in that particular span, they have to show it that they have paid certain expenditures towards maybe rent of the office, salaries of the staff, maintenance of certain computers, printers, machineries, etc. So they had to make certain expenditures. There was certain little income maybe from some side, but they have to consider their accounting very well without giving any pause to the accounting system. That's going concern. Accounting period concept, that means we are going to follow an accounting period, and all the transactions will be recorded for that particular period only. In India, the accounting year starts from 1st of April and ends on 31st of March. This accounting period is very well common, which should be utilized by all the companies. Every company must follow this accounting period, and they have to relate all the transactions in that particular period only. So the accounting year would always start from 1st of April and would always end on 31st of March. The exception of only first year, the one when the business is going to start. Suppose I'm going to start a business. I find it auspicious to start business during Ganpati festival. So I think that okay, next week I should start with the business. Next week from 19th of September, Ganpati festival is starting. I mean, actually going to start then. I will be starting my business from 19th of September, auspicious day. So from 19th of September till the next year's 31st of March will be my first accounting period. And afterwards, again, it's going to be 1st April to 31st of March. So likewise, the life of the business is indefinite. It will continue to work, but you have to follow certain accounting period method. Next is matching concept. This matching concept you will understand in journal and ledgers and in the second chapter very well, because of the dual aspect. Your profits should match with all your documentation you are preparing. So your purchases plus profit should reflect your sales. Then your all the expenditures should be again matching with whatever the income you have earned minus expenditure is equal to profit. So everywhere your accounting should match with or should tally with whatever you are doing it. Say for example, your debit side should match with the credit side. Then your revenues earned minus the expenditure should reflect profit. If A plus B is equal to C, a simple language, if A plus B is equal to C, that matching concept is A and B combined together, then forming C. This equation must match with C minus B is equal to A, logically, or C minus A is equal to B. This should match accordingly. So this is the matching concept which we are supposed to consider in the accounting. This conservation concept is little difficult to digest. Why is that? We are always going to underestimate profit and overestimate losses. The line here mentioned somewhere. Underestimating profits and overestimating losses. This is something towards protective safeguarding principle. Let's take a simple example. If you would like to go for the purchasing something, and you need to have we can say budget for the same. You don't know the actual cost of the product, but you would like to purchase it. Say for example, you would like to purchase a gold ornament. Every day the gold prices are going to change. You don't know final price of the gold plus taxes, what will happen to the final amount, you don't know. The final billing, you don't know. And that's the reason you are going to preserve, you are going to save much money. Now, your natural tendency will be to save more, correct? You are going to save more. Say, for example, for the gold ornament which you are estimating that the costing would be around 2.5 lakh rupees. So you are going to save at least 3 lakh rupees on the safeguarded principle that suppose the price goes beyond 2.5 lakhs, I won't be able to purchase that gold ornament. So I should hold more than 3 lakh, at least 3 lakh rupees, so that the pricing, even if the pricing goes not 10, 20,000 here and there, I can very well purchase the gold ornament. So I'm going to save 3 lakh rupees. The amount for which I'm supposed to pay is only 2.5, logically. But I tend to save more. So what you are doing is you are overestimating your expenditure. You are thinking that, okay, in case the price go high, I may not be able to purchase it. So let's save more. So I am overestimating expenditure. But what if instead of this 2.5 lakh rupees, tomorrow I am getting the gold ornament maybe at 2,30,000 rupees. I will be happy, right? Because I saved 3 lakh rupees, assuming that the gold price would be not changing, fluctuating. So I might require to pay more than 2.5 lakh rupees. But now I saved something 20,000 rupees and I'm getting the gold ornament at 2.30 lakhs only. So I'll be happy. So I am underestimating my profitability. I am underestimating my income and overestimating losses. This is always a better idea. Why? I'll tell you in the business context now. Suppose a business is expecting a profit of rupees 5 lakh, okay, and based on these expectations of 5 lakh rupees, it is going to start with certain next year's strategies, budgets, and everything. Now it has anticipated loss of 5 lakh rupees. Assuming 5 lakh rupees of profit, they are taking further steps, further strategies, not doing certain contracts with the other parties. Assuming, yes, we will be definitely having 5 lakh rupees of profit. But when the time arrives, the actual is a loss of 3 lakh rupees. Now, the business was not at all prepared for not digesting this loss, because it was anticipating a profit of 5 lakhs. Forget the profit of 5 lakhs. It has countered a loss of 3 lakh rupees. And thus, a business will not be able to match up with the all requirements. So now, if the business has decided 5 lakh of profit, it has made certain contracts, and now these all MOUs, memorandum of understandings, made certain promises to any other parties. Now are not going to commit those all things at actual, because it has not earned profit of 5 lakhs but a loss of 3 lakh rupees. So it has to cut down on certain costing and etc. everywhere. So this becomes difficult for the company to digest. Thus, conservation principle is always followed in the businesses, that we are not going to overestimate the profit. Better we find underestimating the profit, and you expect more of the loss. So you expect that in a company there is going to be 3 lakh rupees of loss for sure. This year it's going to be 3 lakh rupees of loss, no chance of any profit. But at the end of the year, you tend to have, suppose, 2 lakh rupees of profit. Will you be happy? Yes, of course, because you anticipated a loss of 3 lakh rupees, but now you have earned the profit of 2 lakh rupees. You are in a better position. So your business is doing very well. So you are going to overestimate your profit, overestimate your loss. That yes, the loss is going to be 3 lakh rupees, overestimating losses. And you underestimate your profit of, on the logically. But when it is going to be 2 lakh rupees of profit, you are going to enjoy that scenario. That's conservation principle. Consistency is one accounting system, one accounting treatment and policy, the method should be followed consistently. So your last year, your this year, your 5 years before transactions, those all should, for all the transactions, all the years should follow similar accounting policies, which is important for comparison purpose. To get compare, it becomes simple. Full disclosure is wherever and whatever transactions you are making, make a full disclosure. You are supposed to disclose all the transactions very well without any hiding anything. So without hiding any transactions, without hiding any particular amount, you are supposed to mention each and every transaction in the business. That's full disclosure.